Hey everyone, Jeff Dorman here, Chief Investment Officer of ARCA, back with another edition of That's Our Two Satoshis Live. For those just joining us, we're basically just recapping what happened in the digital asset market this week, and you can follow along or read on your own our blog at ar.ca, where we have the written version of That's Our Two Satoshis. So we're going to keep it real short and sweet this week because, quite frankly, there wasn't a whole lot of digital asset specific news happening this week. It was mostly macro. So let's start with the macro. Why did we have a rip-roaring rally in digital assets, in U.S. equities, in Chinese equities, across the board, and a complete collapse of government bonds and the VIX and the dollar, when there really wasn't anything that great that happened last week? Well, we've been touching on this since way back in the November 2020 presidential elections. At the time, I remember saying and writing specifically, the markets were so scared of what was going to happen in this presidential election, namely that Trump would lose but not go away quietly, or you'd have a civil war in the U.S. based on the outcome. The markets were so fearful leading up to the presidential election that we said you could, at this point, you could elect a Martian president, and it wouldn't matter; markets would go higher simply because that overhang is removed. That's basically what happened last week. We've been talking about rate increases really since November of 2021, back when the first real high CPI print happened. And it took 5 months for us to finally get the first rate hike by the Federal Reserve. The FOMC met last week. They raised the benchmark Fed funds rate up to 1/4 point and signaled that they'll have 6 more rate hikes throughout the year. It was pretty hawkish by all definitions of the word, meaning they were pretty much signaling that they need to get inflation under control and they're going to keep raising rates. But the market didn't care. The S&P rose 6%, the Nasdaq jumped 8%. Certain Chinese equities, especially in the tech sector, the K-Web Tech ETF was up 31%. Beaten down U.S. tech ETFs like ARC Innovation Fund was up 20%. Really, it's because investors hate uncertainty more than they hate bad outcomes. We've been sitting on pins and needles on what the Fed was going to do for 5 months, and they finally came out and said very straightforward, this is what we're going to do. And when that happens, markets tend to sigh, a little bit of a relief. And also, don't forget how offsides the market is in both equities and digital assets and everywhere else. There are shorts piling up everywhere. There's record cash balances. It doesn't take much to send that the other direction. And that's what we saw last week. So the real question to me is not really, why we went higher. It's more, why are we still listening to the Fed as much as we are? Why are we still listening to the oligarchs in China and Russia with regard to direction of the markets? Part of the reason the Chinese tech market was up so much last week was not just obviously because of the Fed and because of what's happening in the U.S., but also because Chinese policymakers last week basically had a Mario Draghi whatever it takes moment, where they basically pledged to keep Chinese capital markets stable and support overseas stock listings and all that. What was really interesting about that was right before the Chinese leaders came out and supported the market, which again sent equities up anywhere from 15 to 35%. JP Morgan came out the day before and said, we think China is absolutely uninvestable. So here we are again. We got the big bangs like JP Morgan. You've got the Fed. You've got all these people that were just on pins and needles waiting to hear what they have to say, and they're never right, and they're never held accountable. Go back and look at what the Federal Reserve was forecasting back in 2020. They've been wrong every single time. In 2019, for example, Powell called for 4 rate hikes, and instead what we got in 2019 was we got 3 rate cuts, right? So complete opposite of what they intended to do. Everything they've talked about in terms of decreasing the balance sheet. In fact, they've gone the other way. They've increased the balance sheet. So over and over and over again, these government officials and leaders in the banking community tell us one thing and do the other. And yet we're still sitting here, waiting to see what they have to say for market direction. In my opinion, I think this is starting to go away, right? In a world now with 24/7 news coverage and everybody having their own voice on social media, I think these impacts are going to have less and less effect on the markets going forward. It's just hard to really care about an FOMC meeting when we know that their accuracy rate is, less than a local weatherman. It's hard to take seriously what we hear out of China when they flip-flop over and over again with regard to are they supporting the markets or not. So, for now, with certainly algos driving pricing across markets, you're going to see these knee-jerk reactions. I think more and more we're hearing from institutional investors, from other partners of ours, that it's tiring, right? It's tiring to listen to all of these statements that are inevitably going to be inaccurate 6, 12, 18 months later. So with digital assets specifically, again, there wasn't a lot going on other than ApeCoin. I think others have spoken about ApeCoin probably more intelligently than I will, but I'll give a few thoughts on what was happening here. So I think the most important takeaway for me on the release of this new token is that we've mentioned this a couple times in the past, is that it's really hard to find pure play ways to express an idea, right? It's easy to come up with ideas. Ideas are a dime a dozen. Finding the best way to express that idea is really hard. And we talked about a couple of weeks ago about finding pure plays, right? Finding tokens that express a very simple theme. So for example, when Sandbox and Decentraland were leaders last year, it's not because Sandbox or Decentraland are really being used all that much in the market. It's not like there's that many customers or that many use cases yet. But those are pure play metaverse tokens. As soon as the market decided metaverse was a buzzword, those tokens went higher almost immediately. Well, that's kind of what Ape is going to be now, right? Ape is going to be the pure play NFT token. So if you are bullish on NFTs and you're not one of the people who own one of the Bored Apes or Mutant Apes, or you don't really have the knowledge set to figure out the right collection in NFT land to buy, this is now your option. Regardless of what the Ape coin ends up being, right now it's just probably, in my opinion, a little bit of an hyped, overpriced governance token. But it is, a token that is very specifically geared towards NFTs. So if you start to hear NFT being a buzzword again, or you start to hear everyone in your family talking about NFTs, or it's all over the news and media again, rest assured the Ape coin is probably going to go higher. And I think that's what the market is looking for right now. Is we've graduated away from it just being a Bitcoin market or just being an Ethereum market to having real defined sectors, between Web3 and DeFi and stablecoins and NFTs and gaming. Now you're looking for the best ways to express that. And the passive indexes have really done a poor job, right? They're all stale, whether it's the Bitwise 10 or the Bloomberg Galaxy Index, you name it. These indices all have coins from 2016, 2017 that are no longer relevant. It's very hard to express just a generic view on the digital assets market or a generic view on a specific sector. These pure play tokens, whether it's Luna, if you believe in stable coins, or it's Ronin, if you believe in gaming, or it's, a Sandbox, if you believe in metaverse, or now Ape, if you believe in NFTs, I think these are going to become the market's de facto leaders in sector-based investment. So curious people's thought on that. Again, this is not, ARCA has no position in the Ape coin, or we haven't done enough research yet on what it's worth, but again, I think this is the start of more tokens that are going to be specific to individual themes that your generic retail investor is gonna dive into. So we'll see what happens with the Ape coin. We'll see what happens with these other pure play tokens. But as we head into the next week, the market feels pretty bullish to us. January 24th, after the huge 30 to 50% move lower, was really kind of a market low. And since then, we've just been treading water with a few individual winners here and there, like Luna. As we go further from here, it feels very resilient. A lot of the factors we look at are starting to swing positive from negative. Still a ton of cash in the market, still a lot of interest in digital assets. And, as I said, a lot of this uncertainty related to the war and related to rates is now behind us. So we'll see if this is just a bear market rally or if this has more legs beneath it. But in my opinion, definitely room to run higher here in the near term in the digital asset market. So that's it. I encourage everybody to go read the blog. We'll see you next week, and we'll see what the market gives us to talk about then. Thanks for joining, everyone.